What is going on, familia? We're going to start this here in just a bit, What is going on, everybody? We're going to start this here in just a bit, here. We will start at 8:10. what's going on, guys? Okay, so let's look at this here together. Let me change. I put some new, what is it, music here? I don't really like this new music here. Let's do like limitless, concentration music. Okay, cool. All right, cool. So let's start this off, guys. First thing I'm looking at, let's look at all this here. Okay. So what am I looking at today? Let's look at Dixie so far for today. What has Dixie been doing? Consolidating. Let's look at what's going on the rest of the week here now that we're halfway, okay? Okay, so I'm looking at this right now. Jolt's job opening today came out, whoa, lower than expected. Really bad news for USD. Okay, the job market is really taking a hit, taking a massive hit right now. CPI month over month for CHF is tomorrow. ADP non-farm employment. Wow, I completely forgot that the ADP non-farm employment change today, I mean, is going to be happening tomorrow. And we're getting lower than expectation news, which isn't good. Okay, what this means is, guys, that, okay, anything below 104 is very bearish for US markets. And it could kind of explain why gold's been going so parabolic here. Yeah, this is pretty bad, guys. This isn't good news here. Give me a second. We had bad reports in July here, but an ADP non-farm employment change to 73K is not good for markets. So this should be bearish, or you should be seeing this priced in right now. Unemployment claims coming out a little bit higher than expected. What are we seeing with the chart? Unemployment claims have been rising recently, week by week since July 30th. It's been on a bit of an uptrend. We've been on a bit of an uptrend though since January 2025 here. So, yeah, you're seeing a lot higher unemployment claims increasing. Very bearish. So tomorrow's, it gives me a little bit of a market directional bias that we're going to be bearish for tomorrow. And we have ISM manufacturing or services PMI data. It gives us an idea with what's happening. The inflation. Okay. ISM manufacturing looks somewhat decent. I mean, it's higher than last month, which is actually great. Why has it been slowing down so much since November? See that? A little uptick in November, but I personally don't like that, guys. It's not a I don't like that it's this low, to be honest. At least we're not going lower, because we had a 49 and a 58, and then go back down even lower to a 51. We're expected to be a bit higher here, but nothing too crazy when it comes to expansion. And then of course we have the infamous NFP. And I mean, man, 75K is bad. 75K is not good at all. Usually NFP that's that bad is an indication of a downtrend. Less jobs. And if these 89 numbers are becoming the new normal, that is really bad. The job market's taking a massive hit. And again, guys, you know, we're in the business here of like studying economics, both micro and macro. Why that's important? Because remember, it's what are the three components of fundamentals here? You're always looking at the job market, you're always looking at inflation, and then you're always looking at what is the other thing you're looking at? Does anybody remember? Companies in manufacturing, right? So usually something has to break. Okay, whether that's the job market either breaks first. In 2022 to, I would say, 23, or to even 23, or even now to 24, we had a huge inflation crisis, and that was from all the money printing, right? Right now, inflation isn't our main problem. Our main problem right now is give me a second. Our main problem now that's breaking is the job market. Usually company earnings in manufacturing usually breaks. You either have this break or this break. One of the three is always breaking. Inflation is okay. So because inflation is okay, it's the job market that's breaking right now. And we need the job market to break in order for inflation to stay down enough, and then we can cut rates. But we don't want the job market, the Fed doesn't want the job market to break too far, because if we break the job market and we have it down for too long, then obviously we head into a recession here. So the job market's doing bad, all right? And a bad job market will keep inflation down. So our inflation fears are out the window here. But what that does is it actually gives us a little bit of a better idea of what the Fed is going to do, right? Are they going to cut rates? Now, obviously, it's priced in right now that there's a 96% chance they're going to cut rates in September. That I know for a fact. Wall Street's talking about it, everybody's talking about it. So we know that they're going to cut rates in September. We know that this is happening, okay? The question is this going to be a buy the rumor, sell the news, since price is pricing this in? All institutions are pricing this in. What are we looking for next is the $1 million question. What are we looking for next? Are we looking for, okay, specifically, okay, are we looking for something, another cut in October? Or are we looking for another cut in December? The reason that's important is because if we have another rate cut we're looking forward to, what that's going to do is that's going to continue to keep pushing markets to the upside. Because right now, if September 17th, okay, is the rate cut that's going to be happening, if that is the rate cut, we have a buy the rumors, sell the news event. After the 17th, what are we pushing towards for the rest of 2025? Nothing. Unless Jerome Powell goes in the next 2 months and says, hey guys, we're still going to have a rate cut by the end of this year. If not, markets are going to either collapse after September 17th or what? They're going to stay stagnant because the market isn't pushing towards something. Remember, we talked about this. What the Fed likes to do is they like to dangle a carrot in front of our faces. They love to do that. Dangle a carrot in front of our faces, to always dangle that carrot and say, everything's going to be fine, guys. We have a rate cut coming in September. Okay, insinuate that rate cuts are coming next year, which they are. We know rate cuts are coming next year. Okay, how do we know this? We know this as a fact. Okay, it's in their historical, okay, dot plot chart. We know that they're going to cut rates. That's their expectation here. I'm not saying it. They said it, right? This is on the government website, guys. Okay, so their expectations to cut rates, right? So if their expectations is to cut rates, what we need to do is we need to figure out, okay, after NFP, is there going to be a Fed meeting? In that Fed meeting, is the Fed or is Jerome Powell going to insinuate more rate cuts by the end of this year? If there's no more rate cuts by the end of this year, we're going to have a somewhat stagnant market. It might be bullish, but hopefully he insinuates that there's going to be rate cuts next year. If there's rate cuts next year, this is a good thing. The reason why it's a good thing is because more rate cuts means more money printing, means more bullish markets. 2027, we might have some problems. At the end of 2026, we're going to have some problems, okay? But we need to know for a fact here what's going on with these potential rate cuts here in the future, okay? I think Martin Moreno just said, can I join if we do the 3 month? There's no 1 month option. Yeah, only 3 months, man. Only 3 months. So this is what we're saying here. You see what I'm saying? So it's just very, very interesting. Now, let's look at how markets are reacting to this, right? Obviously, I've been looking at Dixie here. This is just from my markups here, guys, from what I'm seeing. Okay, I'm looking at this here, and I'm looking at what's going on. Okay, we're seeing, obviously, the Dixie kind of move back and forth for the rest of August. It's been doing this here. I've had this same area marked up where price has mitigated this zone not once, but then obviously come back down, remitigated twice. And now it looks like it's breaking structure to the downside. Okay, because it's breaking structure, it's already broken this structural point here. I am potentially seeing this to go lower. Head back down to this order block here by tomorrow. What does that mean? I predict markets to be bullish or Dixie to go down tomorrow, most likely. If not, we might have a break depending on news. If the news is worse than expected, okay, for the job market, or actually, what's the news for tomorrow? If ISM services PMI is better than expected, Dixie should go lower. If unemployment claims is better than expected, okay, Dixie should go lower. If the non-farm employment change tomorrow comes out better than expected, better than 73K, Dixie's going to move lower. If not, Dixie's setting itself up for a move to the upside here. Which is the overarching, I would say, more powerful news here? Because I know a lot of times people ask me that. Because obviously you have a lot of news events coming out tomorrow. It's big. I would say they're all important. But the most important is the job market right now, considering the fact that the job market's getting hit the most. Okay? This tomorrow is going to be huge because it's going to give us a directional bias for the rest of the day, potentially even for the rest of the week. If this here is better than expected, markets are going to rally. Okay? Markets are going to rally tomorrow. If it's worse than expected, markets are going to dump. They're going to dump tremendously. And that means Dixie's most likely going to break this little bit of order flow that it's been having here recently, and it's going to move to the upside. Now, if the opposite news is true, we're going to move and see movement to the downside here. Let's look at how S&P is already reacting to this, okay? Well, you look at that. Okay, so S&P came back down to my zone that I marked up here around last week, right, or 2 weeks ago, I said, hey, look, guys, we're going to look for buys here. This is where I would want to buy S&P. Came back down into that zone, and it basically mitigated my zone. What's my expectation here? What's my expectation? Okay. Brandon said, if the job market keeps going down, will that stop future rate cuts after September 17th? No. Rate cuts would continue. The reason why rate cuts would continue is if the job market is getting plowed and hit really bad, in order to protect the job market, they're going to cut rates. They're going to cut rates in order to protect the job market so the job market doesn't get too hit. Because if we hit the job market too much, we're going to have what? We're going to have a recession. Okay? We don't want to hit the job market for way too hard. Okay? It can cause some real issues. So tomorrow, there's two things that can happen here. Okay? We could either see very bullish movement here tomorrow. I could see something like this here. Oh, what just happened here? Okay, I could see something like this here happen, and I'm going to put this at the low, and see a bigger extension if we're bullish tomorrow to the upside, to the 1.27 extension, and I could see S&P tomorrow go to 65.60. The other thing that can happen is if the news is bearish before tomorrow, I could see us come here. Oh my God. I could see us come here and fall. Internal structure. Let's look at some internal cells. No, this is not internal. This is external. So this is external cells because we're on external structure. Okay. I could see something like that happen. All right. I'm very curious for tomorrow's news. I personally am not going to be trading ADP non-farm employment data. The only reason why is because sometimes we hit expectations, sometimes we don't. The forecast is usually never accurate. Look at this. Like the last look at the last couple of months here, guys, in terms of forecasts for ADP. It's just been, excuse my language, dog shit. Look, our forecast here was 118. It went way better than expected. 114, way worse than expected. 111, worse than expected. 99K, worse than expected. 77K, better than expected. The forecast has almost been wrong almost every single time. Okay? So for me, I personally do not want to depend on the forecast here. It's kind of going to be a 50-50 type of thing. You understand what I'm saying? Because of that, we have to be careful. Okay? What I'm looking for right now is for SPX, I consider some sort of drop, some sort of movement here into this side here. Okay? We will trade this tomorrow morning and we'll see what ends up happening. With NAS, let's look at NAS right now. NAS, same thing. Hit that structural point. Okay? Looks like it's chilling right now. Looks like it does want to move to the upside since we are still creating higher highs here. Right? But I don't want to be too early here because this could easily just break this structural point here. Easily break this structural point. And come back down to the 2270. Right? We need to wait for news tomorrow. The news is going to give us. Let's look at the VIX, the volatility index here so far. We did fill in this gap here that I was talking about, but we haven't broken structure, which is a good thing. See that right there? VIX filled in that area and mitigated fully, and now also has pulled back. We haven't broken the structural point, which is a good thing. So that means S&P isn't going to drop dramatically. Okay, because if VIX volatility moves downward, it's usually bullish for S&P. Let's look at gold volatility. Gold volatility, guys. Oh my God, this looks beautiful, man. I've been waiting on this gold volatility drop since July. Since July. And I said it, and I'll say it again. I was been waiting for it. I knew that this thing wouldn't break this structure. I was like, guys, I want to wait for that buy. I think hope that I'm right on this, because we broke 2 structural points here. Well, one really strong structural point. We have a break of structure now with gold volatility. A lot of this could be due to the war, what's going on with, I mean, obviously the Jerusalem and obviously the war going on between Ukraine and Russia is basically almost done. With what's going on in Gaza, that might be fueling this, but not really. What's really fueling this is what I think is, number 1, seasonality, number 2, ETFs, number 3, geopolitical issues with Venezuela. I think the world right now has some really big problems with Venezuela. I don't know if you guys saw what Venezuela said in the news, but I think Maduro just made a threat to the U.S. government. And he announced, you can actually look this up, he announced that he had like 8 U.S. Navy vessels, 1,200 military missiles, and then announced a right of arms act. You can look this up. Republican arms. He vows to declare a republic of arms, which is insane to do. That is like insane. So for you guys that don't know what a republic of arms is basically every single man and woman in Latin America must face, okay, the defense of Venezuela. So like this example, if the U.S. attacks Venezuela to take Maduro out, he calls for a republic in arms. Every man in Venezuela must now basically be deployed. That's basically what it means, which is insane. Yeah, this is just insane. Whatever he's doing, I think that's spiking up gold volatility. To be brutally honest, because this news right here is absolutely insane. So I mean, with Maduro potentially planning a republic of arms, and the whole, I mean, apparently he like runs an entire drug cartel of all Latin America. So, man, you got to feel bad for all these Latin American. I mean, there's a lot of fentanyl coming still across the border. You know, fentanyl is the #1 cause of death for all people under the ages of 30 years old in America. So, I mean, there's a huge crisis here. We have big crises right now in the U.S. that are like not getting taken care of at all. But that's obviously geopolitical tensions here. That's what it's creating, right? Now, obviously, with the 10-year yield, I've been talking about the 10-year yield going lower. And we're doing that, which is great. I just want to see the 10-year yield dump completely. I want to see the 10-year yield dump and break structure. It did break structure here. I just want to see a clearer dump. Reason why is the lower bonds go, the higher the market goes. Because usually people take their money out of bonds, low-risk assets, to put them into high-risk assets. So we need the bond market to follow that sentiment, okay? Let's talk about gold. Currently in gold, I am up right now. Let's look at it. How much am I up on gold right now? Almost, I was up about almost $6,000, right? I think you guys can probably see that. So I'm up about $5,400 right now. It's amazing. I'm just pissed off because this gold trade should be a $40,000 to $50,000 trade. So I'm just pissed off. It is what it is. I got in really low, guys. I got in here. This is where I was calling buys, where I got in my buys down here. So currently we're up right now on our positions with our students and everybody about 22,000 points or 22,000 pips. I don't know that many people calling out 22,000 pip moves. Okay. And then obviously I knew gold was going up. I was looking for pullbacks here all month. This happened during Asian. I didn't get into it. This one happened during New York. I didn't really get into it. I cashed out of one here in this pullback very early. And then I was waiting for a pullback here and it never came. What are my thoughts now on this? Well, guys, look at this. I'm going to show you something. I'm pissed because I had positions here too. I had buys here July 31st. I'm so fucking pissed, bro. And I had buys here and here July 1st. If I had just held, man, I'd probably be up another 50, 60 grand. Okay, so this is obviously what we're looking at, right? If we're looking at the daily, we're looking at what? Order flow, breakout, right? Now, we are in, I wouldn't say euphoria, but we're in unmarked territory with gold. Okay? Because we're in unmarked territory with gold, give it 2 weeks and maybe we'll pull up to their coast and they'll be quiet. Yo, Juan, you're so right about that. I could see the U.S. getting involved. The U.S. would destroy Venezuela. No question, the U.S. would destroy Venezuela. So I don't think we have anything to worry about. What I do worry about, I'm not going to lie, is the people there. There's innocent people that are going to die. That's number one. Number two, Venezuela is so close to U.S. soil that it's a bit scary. It's not like we're going to war with Russia or the Middle East here. Like, you have an ocean. You have the Caribbean, and Venezuela's like right there, you know? So it's a little bit of a scarier thing here when you have that happening, okay? Now, obviously, we broke all-time highs here. So now we're in price discovery. Because we've already broken structure here, we're in price discovery mode. So this is good, but also dangerous because we don't really know where the retracements are going to come. When you're in price discovery, you don't have places where you could see price either mitigate, institutions that you can kind of see that they're aiming for a specific price. It's a lot more difficult in price discovery. So we're making money right now, but we don't really know where it could stop here. Now, I already did predict, you know, on my last call, I did look for us to go all the way to, you know, 1.27, which was right here. And then even on the lower structure on the fib extension, I was looking at, you know, 1.14 and 1.1. That was really it. I wasn't aiming for anything other crazy than 34, 39. So it's actually insane that we're at this price and the price keeps continuing, and it's because it's now respecting fib extension around this zone. I do believe we're going to get a pullback here. Okay, we are going to get a pullback. We're going to get the pullback that we need with gold. Where's that pullback going to come? There's two places. Okay, one I see that solid for me that I'm going to get into is probably here. I am looking at this zone here as well, but personally, I don't trust it. I don't think it's far enough of a pullback for me, so I'm personally not getting involved with it. I'm looking at this zone here specifically. So I'm looking at, and then I will examine price here, just because obviously it's a roadblock candle. We have another roadblock candle here, so that's kind of something that I'm looking for. But I think we're going to continue. Fib extensions would bring this to 3,600. Then I see a massive sell-off at 3,600 here. Or this thing can continue, keep going up. Wait until 3,600. Overall, I think we could see 38 or 3,800 or almost just under 3,900 by the end of the year. Which is insane. Right? So This is where my buying zones are. Let's look at GU here. Okay, so with GU, what are we doing with GU here? We're creating lower lows with GU. I personally don't like it. I don't like the lower lows here with GU. I'm looking at sells here. Internal. And then I'm looking for buys here internally. That's what I'm looking at with GU. I'll let the Asian range establish itself, but look at this. That's pure wick off. With the spring move here, swiping the liquidity. Man, that's like pure wick off, guys. That's a schematic one. You guys remember wick off, right? You have the SC, ST phase B. You have the AR here. You have the spring move here. You have the test right here and the SOS. And then the run. The pullback, continue of a run. This is wick off. This is a schematic one right here. You see that? You see this here? It's a schematic one. Wick off theory. So I'm looking to see price probably move to the upside here. USD CAD, let's take a look at that. USD CAD looks okay. Let's look at Bitcoin. Wow, Bitcoin. You're not doing anything, Bitcoin. You're really not doing anything. One good thing with Bitcoin is, well, let's look at the total cryptocurrency altcoin market. It looks like it's consolidating a bit. It looks like this is an order flow, which isn't bad. Total cryptocurrency market cap is running higher and higher, creating higher highs. I think we're gonna have one more run and rally, and then I think the whole market's gonna dump. Even here, like, you see this? Wave 1, wave 2, wave 3. 1, 2, 3. Right? We gotta be careful with that. These are the others, excluding the top 10. Looks promising. We haven't even gone to January 2025 highs yet. It looks like altcoins are getting like completely destroyed this cycle, and the main tokens are really taking over. All the other ones look like they're getting crushed, completely crushed right now. Okay, so let's look at Bitcoin now. I just need Bitcoin to break structure, guys. That's the problem here. Is if I don't have a break of structure here, I'm personally not looking to buy. The reason why is we technically like didn't break structure on this pullback. technically, like, we actually wicked and swiped liquidity. On the daily, we technically didn't break structure. So this is a good thing. This could mean that we might have a really good pullback with Bitcoin here. I need to make sure here for me, before I get into some buys or look for buys on Bitcoin, that we just don't mitigate. And when I mean mitigate, I mean like we don't just go here and mitigate on this structural point and then we have another lower low created. Because if another lower low is created, we're going back to 105 and we could even go all the way back to 98. So I don't want to wait here. For Solana, we are seeing some good movement with Sol. It did pull back to 85 like I talked about. Moved to 218. I could see this rally and run. MSRT, let's look at MSRT. MSRT looks like it's getting to that zone that I'm talking about here. I'm personally going to buy MSRT here at 318 to 306. I'm probably going to look for buys here on a Schwab account and start DCAing into MSRT here. Nvidia here. Nvidia has been going down recently. That's odd. If Nvidia breaks the 2-day here, Nvidia is going to have some trouble. Nvidia is going to come all the way down here, about down 8%. I mean, right now, currently from the position that I got and that I called here, we're currently up right now about 76%. All right, guys. I will see y'all tomorrow here. Oh, let's look at Coinbase here. Coinbase is looking nice, man. Daily doesn't look good, though. Wow. Coinbase can rally. Oh, it has a gap here. Oh, my God. Coinbase looks great right now. Coinbase looks amazing right now. This, we might get something out of this. We might get something out of this. Copy link here. I like the way Coinbase looks right now. That had me jumping out my seat. Sometimes I don't jump out of my seat, but when I do, it's because I see something I really like here. Coinbase. I like Coinbase a lot. Coinbase looks good. Pyth looks great. Oh, it's down now, actually, after that huge swing to the upside. Solana. Jupe here looks like it's finally getting into the zone that I talked about here. Jupe, I'm looking for buys. I'm probably going to get into some buys in that. Gold, rebuy here. SPX tomorrow, we're going to see, but I could see an extension here or a mitigation tomorrow. All right, guys, this sums up our session. If you want access to everything else, all you got to do is go into our free group, and if you're a paid group, I'll see you guys and upload the recording. Appreciate y'all. Love y'all, and talk to y'all soon.